The biggest one I look for is energy. Whatever you do, don't correlate success with charisma. A lot of investors get caught up in charisma. I definitely separate energy from charisma. Somebody who can work endlessly and tirelessly to see their vision come to fruition.
All right. We're here at the Venture to Victory podcast where we look at the entrepreneurial journey from startup to exit. And I'm totally pumped. I've got a long term client, friend, and incredible VC today, Adam Jackson. Welcome. How are you, Adam?
Great, doing well.
That's awesome. Well, I'm pumped. First pod of the new year. And we're going to start it off with a bang talking about venture capital and corporate venture capital, something not a lot of people understand. And so we're going to get a little clarity on that. We're going to talk about what you see exciting coming up in 2026. We're going to learn a little bit more about where the venture market is going. And we're ready to rock and roll here. So we all always start with an intro on the show, and I'm going to do a quick one. Hopefully I won't botch it up too much. It'll be pretty accurate. Let's roll with it. Adam Jackson, you are a partner at Bosch Ventures, the corporate venture capital arm of the German global industrial tech titan Bosch Corp. For those probably have heard of Bosch, but for those who haven't, the corporation generates close to 100 billion a year in annual revenue, employing close to a half a million people across the world. And you're part of the corporate venture arm, which we're going to talk about. You're currently based in Boston, and you have led early to mid-stage investments across their various portfolios. You joined Bosch Ventures after heading Bose Ventures. Now, we all know about Bose as opposed to Bosch because even when I was a young guy, I got my first car, I put the Bose stereo system in so everybody could
Absolutely.
hear me when I was 16. But again, another corporate VC arm where you backed companies across healthcare, consumer tech, and advanced hardware. Prior to Bose and Bosch, you built a diverse investment track record across both corporate VC and traditional venture firms like Argo Global Capital and GI Ventures, where we first met, gosh, probably 15 plus years ago, and worked with some of your portfolio companies. You earned your undergraduate degree in finance from Bentley University, and you have an MBA from Cornell's distinguished Johnson School of Management. And Adam, you've been actively supporting founders, many of them of which I have spoken to about you over the years, spanning AI, deep tech, mobility, energy efficiency, and next gen enterprise software. With this huge track record, I think you're some guy in his late 70s, but you're still a very young man just getting started.
Yeah.
So
Starting
it's
to
really
look a little
great to have you
older.
on.
Starting to look a little older, getting gray.
Yeah, well, hey, that happens to all of us, unfortunately. I can't help you on that one. Although there's a lot of investment going into longevity and health span, and AI is going to change the whole model. So who knows? Maybe you will make it to 120,
Well,
or at least
hopefully.
look like you're 40 when you're 80. So we'll
Yeah.
see what happens on that end. Well, let's just I'd love to just kind of jump in with maybe a basic question because we so many entrepreneurs and startup guys want to raise money in the venture capital market. And there's sometimes lack of familiarity with what the differences between a traditional venture firm and a corporate venture capital firm. And so, of course, the big guys like Intel and HP, where they invest purely off their balance sheet. My understanding of Bosch is kind of a little bit different, where they are a corporate venture capital firm that is operating more like a traditional VC in terms of actually raising funds and making investments from funds. So, love to find out a little bit about the differences and why you have spent so much of your time now in your formidable years working for the corporate arms in the venture space.
Yeah, absolutely. I mean, I think corporate venture for years has had a fairly negative connotation on it, to be honest. And there's various data points out there that the average corporate venture group lasts about 3 years or so.
I had no
That four
idea.
year, yeah, that 4 year anniversary doesn't come for a lot of funds. And yeah, so I started out in financial venture with Argo Global Capital and GIV Ventures. And then did several funds there and moved on and started setting up corporate venture arms. So I helped set up the Boston office of Stanley Black and Decker. Only lasted there a year
Mm,
because it was a highly strategic fund, and I can kind of walk down that path. And then went to help set up the Bose Venture Group and grow that, which was much more like Bosch, which was financial first and strategic second. So I think as founders are talking, any founder should never shy away from corporate venture groups. They tend to have very smart people in them that can give very solid feedback on the markets that the startup is going after because they're living in those markets day to day on the operational side. But you really got to be careful to understand that the two formats of corporate venture are everybody kind of puts in their head: are you a strategic first or are you financial first? That's a good way to look at it. I think it's kind of a simplistic way to look at it. If you look at something like Bosch Ventures, there's nothing strategic about losing money, and we live that every day. So
No.
any venture fund that's just doing strategic deals with no concept of whether this is going to return capital or be a smart investment, those are the corporate VCs you want to be a little more wary of. One of the issues is you say, well, we're strategic first. Well, if you're a public company, your strategy might be changing quarterly. So that doesn't fit a 10-year lifespan of what a venture fund should be or a 5 to 10 year lifespan of what a startup is. So you really want to hunt after those corporate VCs that have some longevity. So hopefully they've been around for a while. Don't have massive turnover. It's not viewed as kind of an assignment within the parent. It's more viewed as a career path, and that are in it for a good financial return. Now, every corporate VC is going to be doing deals that are strategically relevant to the parent, and that's very true at Bosch. I can't really do a fintech deal. I'm not going to do a space deal. I'm going to look at every automotive deal, but they've got to be deals that can be financially successful. That's really, really key when talking to corporate VCs, that they put financial returns at least on par, if not above any strategic value, because that's how
Wow.
the entrepreneur will know that the corporate VC will be with them for the long term. They've got the same priorities. They're going to see eye to eye, and they're really going to be there through thick and thin. And that's how Bosch is set up. It's how the Bose Venture Fund was set up. We wanna see good financial returns. Absolutely.
Well, I'm so glad you brought that up because, I think intuitively, a lot of startup folks probably think differently about that, right? Thinking that, well, rather than just go to like the financial oriented VC, a strategic VC would be even better, right? They're
Right.
going to see how I can integrate into their area. They're going to be more hands off, right? Because they're not traditionally looking at all the numbers all the time. It's a strategic thing. And that they could also potentially be a great acquisition source if we grow because we have that inside track with them. So I think intuitive, you think, well, if I do want to go to a corporate VC, like, big corporation that has that arm, that the strategic side would be the better side. But it's so interesting to hear you say the opposite, which it doesn't make a lot of sense, right? A new management team can come in, they can change the strategy, and then they just start plucking out the portfolio. That's a great point for people we're considering that.
Yeah, absolutely. I mean, it is a little bit counterintuitive because if you think about it, as a founder, you wanna make sure that everybody who's on your cap table is gonna be seeing eye to eye with you. Everybody's trying to get the equity value to go up for a large exit, and you want a cap table where they're gonna be there for the next round, or they're gonna be there if things don't go well to support you. And if it's a
Yeah,
highly strategic fund, that's not necessarily gonna be there. They're gonna see if the startup missteps, all right, maybe the strategic value is not there, or we're not gonna be able to work with this company like we thought we were going to. Let's not be there for the next round.
yeah,
Let's not, maybe we don't really care about the equity value of the company. So we had the company sign some incredibly odd exclusivity agreement with us. Oh, and now that we're selling that division, so now nobody's going to be there to support it at all. So you really want to have commonality in goals and vision, and that only works if everybody's goal is to increase equity value. At Bosch, we definitely work on the strategic side as well. We have an incredible program called Open Bosch, which totally independent investment, but they do 60, 70 POCs a year with startups. It has nothing to do with investment, can be very large if it goes kind of global with Bosch. And we feed startups there, they feed us startups, it goes back and forth. So we still are want to grow strategic value as much as possible, but it can't be there in detriment to financial success.
Yeah, I think also counterintuitively, there's always this thought, well, if I'm working with a strategic corporate VC who doesn't have independent funds set up with a specific, internal rate of return and all the traditional venture metrics, that they have unlimited capital. They're just working off their balance sheet, right? They've got billions of dollars in cash. And there is that sense. I have a special place in my heart for corporate VC conferences because that's where I actually met my wife at the biggest
Mhm.
one in the world, where I
Yeah.
was with the head of Intel and a bunch of other places. But there was that sense then that these companies have so much cash. If you get in bed with them, you don't have to worry because they can just quickly just pull off the balance sheet and fund more investment dollars like secondary rounds. And what you're saying is that's definitely not true. So
Yeah, you have a
yeah,
CFO change, you have a CEO change, you've got a business unit head change, and that those funds can dry up pretty significantly unless you truly are cash unconstrained, like an Nvidia or an Apple, which
yeah,
is kind of a maybe a different category in and of itself. Yeah, and the other thing with these balance sheet funds, and the way we do it is, we essentially have allocations off the corporate sheet just for us that we raise in 10-year cycles
okay,
of every 3 years. So we don't go back to the parent on a per investment basis. We don't go back to the parent. Nobody from the parent sits on the investment committee. So it's truly run like a financial fund. I think it's the right way to do it. But one of the issues with the kind of pure balance sheet funds is they usually have business unit members on their investment committees, and that gets very hairy.
yeah.
They've got different numbers, different priorities. That can get tricky. And I think the best question I get from startups is who's on your investment committee.
Mhm.
That's the best question a startup can ask when speaking with a corporate VC.
Okay. So for anyone listening, that is a pro tip right there. You just
Yeah,
heard it. So
absolutely.
so so rewind and go back and listen to it
Yeah, if
again.
it's
That's
if
the
the
big
investment
question.
committee is stocked with business unit members or even C-level execs,
Mhm.
there's questions there.
Okay, cool. Well, I wanna jump real quickly. We were joking around, like, before we started the podcast about one of the biggest questions people ask is how do you become a VC? Because everybody thinks it's this, magical unicorn of a life and be the big venture capital investor. And you said your answer is usually don't, which I thought was really, really hilarious. But taking that into consideration, let's just drop back for a second. Why did you become a VC? What interested you in becoming one? What did you love about it? And finally, why did you respond kind of in a funny, sarcastic way that don't become a VC if you're thinking about it?
Yeah, absolutely. I mean, I fell into it. So, I did one of the rare moves of I joined venture right after undergrad.
Yeah.
So, during, my undergrad years, I was actually writing code for a government security contractor in Northern Virginia. Not one of the large ones, but one of the kind of the medium-sized guys, cybersecurity stuff. I'm not much of a code slinger, but I could hack away through, some internships. But actually became fairly good friends with the CEO of the company, who, I made a relationship with. And, he was gonna offer me a full-time position. I said, "I'd kind of rather stay in Boston." I grew up in Northern Virginia. I love it, but try something new. Girlfriend at the time, who's now my wife, was up here. Do you know anybody up there? And he said, "Yeah, I know the founder and managing director of this venture firm, Argo Global Capital. I'll see if I can get you at least an interview, or try to put something in front of you." So he did. I got an interview. Walked in. Guy's name is Tony Haid, brilliant guy, and he essentially said, I don't hire anybody without a Harvard MBA. Thanks, but no thanks. And
I mean, Cornell's no slacker. Come
but
on,
this was
let's
before
face it.
my MBA. This is right after
Okay.
undergrad. This is right out of
Gotcha.
undergrad.
Yeah.
So
Right.
2005, and I said, okay, that's unfortunate. How about this? Why don't I'll give you 1 year for free. So you don't have to pay me. I was lucky enough that my parents made me work from when I was about 10 to when I really stopped. So had plenty saved up to give a year for free. And hey, how about that? He said, "Thanks, but no thanks." And then,
Oh, wow.
apparently, he told me he was having some very good wine with his wife that night and told him the story, and she was like, "Hire him and pay him something. Like, you're being stupid. You're kinda being a jackass. So, somebody offers you a year for free, don't pay him 0 and see what happens." And I ended up staying there for over 10 years, so at Argo
Wow.
Global, and I kinda learned everything, and when I started, he gave me great advice. He's like, "This job gives you the highest highs and the lowest lows." And I think for my first kind of 2 or 3 years, yeah, a lot of the lowest lows.
Mm,
I was
really?
working with mostly companies that weren't doing well because that's what they gave me. Like they're going to work on the rest of the team. The more senior guys are working on the fun deals that are going well. I was being put in as kind of interim chief operating officers, interim CFOs in these companies, trying to turn things around, try to fix things up. So got a lot of hands-on operational experience. I really like the operational side of things.
Yeah.
But I look back at it, I should have gone into a startup maybe. I was too dumb to not know what I didn't know. And I was like, and I knew I was learning a lot. And I knew I was learning a lot from a lot of really smart people, which is fantastic.
What's great about the opportunity you had, though, is if you're given kind of the low end of the struggling part of the portfolio, and, the ones you can't quite turn around, it's not really a blemish, but the ones you turn around, it's a big success. If you get all the
Absolutely.
winner and they get all the winner, the ones that start to fall off, you're sitting there, holding the key a little bit.
Oh, I completely agree. And I think, the first kind of 3 years, I'm not sure I really slept at all because I am working with the ones that were just tough. Management teams where the relationship was already shot, cap tables were a mess, funding was a mess, just stuff that was just tough to work with. And luckily, I mean, I was kind of young and dumb. So, but I think mentally, when you're just working with stuff that's not working, that takes a toll on you.
Yeah.
And so when people say, "How do I get into venture?" I'm like, well, start by not getting into venture. Start by getting into a startup or getting into, and I also say that the operational experience I had has been hugely beneficial through my entire
Yeah.
career.
Yeah.
And I think people who are gonna just go right into venture early on and kind of become spreadsheet jockeys, et cetera, don't get that. And I know a
Yeah.
lot have not lasted a long time because of that. So go out and get operational experience first, and then see if you actually want to be a venture. I mean, at the end of the day, we're kind of glorified paper pushers, right? We're middlemen between LPs and brilliant entrepreneurs, and you gotta see if you really wanna do that, get rid of kind of some of the halo effect that comes with the term venture capital, and you see a lot of people with hugely successful wins, et cetera. There's a negative to it as well.
Yeah.
So,
Well,
yeah, I tell people, maybe don't get into it. Don't get into it the way I did. Definitely don't get into it just, directly
yeah.
out of undergrad and kind of walk into a room, but try to get that operational experience first and
Yeah.
then figure out if you really want to.
So it's not really don't, it's more like defer, right?
Yeah,
Because
defer, yeah, 'cause I mean, I was on a call recently with somebody who I call them just degree stackers. He had a handful of master's degrees in various things, was going for a PhD, and I was like, then I'm going to get into venture. Okay, th- th- that's interesting, and the degrees are great, and they're all from very good institutions. I mean, I'm in Boston, so you can imagine some of the institutions he's getting degrees from. That's not going to make you a good VC.
yeah,
You know, uh, if you want to, if you have some money, go do an angel investment and see how that goes.
that
See
that's
if you
really
can.
that's great advice. I mean, I've having worked for so long with so many, and there's great ones from every walk of life, but there's always something a little special sometimes when you're talking to a VC that had built not just worked for a startup, but maybe built several successful companies. Because what the one thing you can never fully understand unless you've experienced is what that pressure, the weight of the world is like when you're running the company as the startup person and you can't make the payroll or you're having a big blemish, and the emotional weight of what that's like to be in that position and have to make it all happen. Obviously, intellectually, other VCs can understand that too. I mean, and they're involved in it. But there's always something special when you're working with someone who can counsel the startup companies by saying, "Hey, I've been there in your shoes. I've done it before. I know what you're going through." And so that is pretty exciting. I would say back to your that famous, infamous meeting with Tony and his wife. Two things from doing recruiting constantly. One of the walkways from that is never ever underestimate the power of the spouse to
Yeah.
give a nudge. One
Yeah.
nudge, it's like the old Rocky movie, you know,
Yeah. Absolutely.
Rocky go and he's there, otherwise he's retired. And
Yeah.
the second thing would be the power of wine in making decisions. So I just want to throw those two things out.
Yeah. And he had an incredible wine collection. He was a co-founder of Advent International, so he successful
Wow.
guy and, had a great wine collection. And yeah, I completely agree. One thing that's definitely changed in venture over the years is when I started, a lot of VCs either came from investment banking or consulting or operational roles. Now the vast majority of the ones I work with are ex-founders, who had
Wow.
some wins, and, I think that's changed in the market in general for the better,
Yeah.
no question about it.
Well, I always like when I talk to VCs, I like to get their opinion on this question, which is really, what is it that you look for when you're looking for an entrepreneur? Because there's so much of an X factor when you're doing early stage. I've had people say everything from the business doesn't really matter. I'm betting on the founder, him or herself, right? That they will have the ability to adapt and change as needed to find the right, to handle the situation, find the right product market fit. It's more about something special in that individual. Tim Draper said on the my podcast with him that he looks for the ability of the founder to acquire talent, to have followers, to have people that believe in him or her as one of the key defining things that they look for, right? Because that's selling the vision, selling the world, getting people to leave what they're doing and take a risk and pursue this dream. What is it that you look for? What's kind of the thing that you've observed, having had so many investments? I think we talked it's somewhere between, in the upper 80ish range, we'll say plus or minus. Is there a special ingredient that you look for that's shown you the difference between the success of one person versus another?
Yeah, I mean, the biggest one I look for is energy.
Really? Wow.
So, stamina and energy.
Wow. Okay.
I had a great professor at Cornell who essentially said, "Whatever you do, don't correlate success with charisma," because there's a bunch of studies out there. I think he wrote one that's not what a successful CEO or successful entrepreneur has. And I think a lot of VCs and investors in general get caught up in charisma. I definitely separate energy from charisma. So just
Yeah.
somebody who is can work just endlessly and tirelessly to see their baby or their vision come to fruition. Guys that are emailing me at 1 or 2 in the morning and just have just a seemingly, and I don't have endless energy. I wish I did. I mean, I got 2 small kids, but so the CEOs I back now all just have an incredible amount of energy. I think it's the number one priority. And then the second one is just intellectual capability. I mean,
Yeah.
they've got to be just brilliant, not only in the technology, but also on the market side. When I look at my failures, it's really never been the technology. It's always been, the market didn't develop correctly. Oftentimes is bad boards. I think, bad boards are the number one thing that kill companies in the startup
Yeah.
space. But if I've got a CEO that is, intellectually brilliant, both on the technology and the market side, and then has this endless energy, that's the number one criteria I look at. I do agree with Tim, like, they've gotta be able to have kind of followers who wanna ride and die with them.
Yeah. Well, that's a little bit of the charisma factor there. Yeah.
Yeah, it
Yeah.
is, but I think they also, they need to have those followers that have the same amount of energy, that are just
Yeah.
always, and, people say, "Well, you work too much, et cetera, et cetera." Yeah, but ventures is, it's a 5 or 10 year kind of sprint slash marathon, then you hopefully sell the company.
There's no
We
work-life
don't.
balance equation in a founder if you
Yeah,
get
it just
when you cut
doesn't.
to
It
the chase
doesn't.
on it, yeah.
Correct. It doesn't exist. And
Yeah.
I've got some great founders in the portfolio right now, and they are just they don't seem to tire. And I think that's the number one priority.
It's so funny when, I first moved, gosh, over 20 years ago to the San Francisco Bay Area. I went down to see the startup company, and it was the COO of the company. He said, "I want to give you a tour, have you meet everybody." So we're walking around. He said, "Would you like something to drink? We have a whole room." I said, "Sure." So I went back there and he opened up the whole drink closet. It was filled with from the floor to the top with water and Red Bull. That was it.
Yeah,
No in between. So I think
should
this
be.
the energy has to be mitigated with, is it natural energy or enhanced energy? But certainly there's a lot of coffee goes into successful startups. A lot of
Yeah,
caffeine.
absolutely. Yeah, they've got to have a lot of energy, brilliant. We actually was with a founder recently who was getting, kind of, somewhat upset and a little emotional over some things that were happening to the startup. And he apologized. I was like, you know what? Don't ever apologize for passion.
Yeah.
I've been in boardrooms where things were thrown and still friends with those people because you got the passion, you got the energy, it's coming out. No issues there. But if you have that energy, I that's the number one thing I look for.
Yeah, I would agree that the charisma thing can be very deceiving. One of the things that we've observed a lot, having done so many like chief revenue officer, VP of sales searches, is that sometimes we will not even let the company meet the candidate in person first. We want to do like a phone interview because a super charismatic salesperson can deceive you because they're
Mhm.
so likable and they're so believable. And sometimes you can get lured into looking past the actual, what were the actual achievements? How did you hit the metrics? What did you actually accomplish? Because they're so likable and you want to follow them. You want to be part of it, but that doesn't mean they can necessarily execute just because they're charismatic.
Yeah, no, absolutely, absolutely. I think it always gets tough where you also want to make sure they're just ethically there as well. You want to somebody
Of
again
course.
when I started working at Argo Global, the motto was they've got to pass the foxhole test. They got to pass the foxhole test. And a few of our CEOs who were great CEOs and passed the foxhole test were also kind of assholes.
Well, what is the foxhole test?
So the foxhole test is again Argo founded by a guy who's fairly old is it's a World War II analogy. Like, who do you want
Hmm.
sitting in that foxhole? Somebody's going to give you up to the enemy or make noise, or you're in a small confined space. Your life is on the line. Who do you want next to you? And you want somebody who's going to fight it out and go for the kind of greater good here. But that person might not be somebody you actually personally like. So
Yeah,
we
right.
had some. I was involved with some wins where I didn't really like the CEO on a personal level, but you know what? They were brilliant. They had a lot of energy. They passed the foxhole test. They were honest people. Might have been a jackass, but still, were investable. So I
Yeah,
think you
yeah,
also got to watch out as a VC not to just pick people you like. I think that becomes an issue as well.
definitely. Well, look, on that note, I'd love to know, what was your favorite win that you've had of all these different investments? And you said you have a portfolio that doesn't work out, and you had some that did. You had a couple big wins in there. And I know you're an investor in Whoop, for example. We all know Whoop. Everybody kind of knows that, and they wear the band and everything. But what was your kind of favorite win and why?
So I'm glad you brought up Whoop because I love that win because the sleep scientists and the various scientists that we had hired at Bose to help
Yeah.
evaluate told me not to do it.
Oh, really?
They were like, yeah, one of them was on the fence. I'll give that qualifier, and the other one was like, absolutely not. No way. There's no market here. People aren't going to do wearables anymore. It's all going to be contactless sleep. And the science isn't there yet. They need this huge data set. And I was like, guys, I think that the team's great here. The product is, this was early on. I was like, the product's got potential. And everybody said not to do it. And, pull the trigger on that one. And that was a great deal. I was going to say, actually, I've got an investment, an angel investment I made 10 years ago, exiting. It's not public yet in about 2 weeks that I'm very excited about. So I can't mention the name.
Okay.
At Bosch, I'll mention that I've been at Bosch now about 3 years. But the first investment I made was a company called Jetcool, and it sold to Flex 11 months after I made the investment.
Wow.
And, again, exit's not public, but that was satisfying and, felt really good about that one. It was my first investment at Bosch, so getting a kinda quick early exit's always nice.
For
Management
sure.
team fit the mentality of absolutely just endless energy, strong management team, and that was an interesting one because that was in data center cooling, but we made that investment before the big OpenAI news and all this big AI push. So it was one that we read early, which I'm really kind of proud of.
Yeah.
It's now everybody's looking at all data center cooling deals, and
Right.
we see 2 or 3 a week come through. But this was before all that, so we caught that curve before it started, and I'm really proud of that one. And then one more I'll mention, which is old, but people, this is not an investment I made, but I worked heavily on at Argo, a company called On Mobile Systems, which was a California company that was failing. It was burning $1 million a month. We helped move it to India and IPO'd it on the Indian Stock Exchange for a great IPO. And that was one that I got involved in as kind of a young operator turnaround situation that absolutely was just phenomenal.
So it sounds like the theme here is it the size of the win, the market space it's in, the credentials, but it's this idea of doing something where maybe other people didn't think it could succeed. And that seems like
Absolutely.
that's what makes it so exciting for you. Not the size or the scope of it, the fact that people said, "Don't do it, you can't do it," and then it turned out, which is an
Yeah,
interesting
100%,
personality trait
100%.
for you.
The size is nice. Don't get me wrong.
Of course, yeah.
But yeah, I like bucking some of the trends. There's no question about that.
Are you kinda like that as a personality? Like, when someone says, "There's no way, Adam, you can do that," now it's like, "Okay, I'm gonna do it because you said I
Yeah,
can't do it."
absolutely. I think I might get in trouble for this, but I also don't fit the tall, skinny, blonde Harvard VC model. We'll see if we have to edit that out or not. But yeah, I think it's yeah, exactly. That's why walking into Argo and saying I'll do a year for free is interesting. I actually wasn't even going to get my MBA for the longest time, and then the timing kind of fit and it made sense. So kind of fell more into the model, I guess, at that point. But
Yeah.
yeah, if you tell me no, I like to make good decisions to get to a yes if possible.
So it's 2026, January. What are you most excited about for the coming year? Outside of, AI is gonna change the world and all the public market, headings that we see every day.
Yeah, I think doing some non-AI deals I'm pretty excited about. We've got a
Yeah.
good pipeline already. I mean, Bosch is heavy in AI, was strong in AI. There was a big Wall Street Journal article today that says we're going to invest about 2.5 billion as a company, not just
Mhm.
out of the venture fund in AI by 2030, I believe. And AI will change things in the industrial space, no question about it. I personally like on the AI side, AI solutions that are going to make industrial processes safer and more efficient. I think that's good for everybody. I'm not hugely excited about all the AI deals that are purely just cost savings. I think AI that can grow the top line and maybe even do some incredible things on the R&D and breakthrough side are more interesting than purely here's a new AI solution for controllers to decrease time spent in Excel, which is what we're seeing a lot of.
Yeah.
I'm a big fan also of the heating and cooling space. I think when you look at especially cooling technologies, there's some really interesting stuff out there. Bosch has a big home comfort group that does primarily heat pumps, but other things as well. I think there's breakthroughs there when you look at the cost of energy and the
Mhm.
amount of dollars, around 30% that are going to cooling or dehumidification. I think there's some really interesting stuff there.
Yeah.
So we're pretty broad. It's hard not to say AI because everybody's looking at that, and I'm sure we'll be doing some more AI deals in the new year.
Well,
Also hoping to see valuations come more realistic, but we'll see where that goes.
yeah, you always get worried about I mean, we all lived through the dot-com period, so you always worry about, you wanna have great growth and a lot of profit, but you don't wanna create a bubble situation where it has to burst at some time. It's funny we talk about AI because everybody talks about the sexy part of AI, that's kind of the top of the vertical integration, you know. But as you work your way down to the very bottom, which I said, it's not just energy, right? Because nothing AI doesn't run on itself; it runs on energy, and then it runs down to the data center, and then what's inside of the data center. Ultimately, you get to the very bottom, like how do we even keep the data center running, right? With the cooling and the heat and everything. I think sometimes people don't look at that as the sexy part of AI, but that's an area where you can make a lot of money because no matter what happens with AI, the energy side has to get built out. And so there's going to have to be an ROI somewhere built into there, almost like a real estate deal at some point.
Yeah,
So,
absolutely, absolutely. And we were looking at a lot of data center technologies, whether it's we did cooling or energy, some of the interconnect things, all incredibly interesting, and we placed some bets there. So yeah, the AI infrastructure side is really interesting for us. I think some of the business model aspects of AI are really interesting to us. What's next after LLMs? Because LLMs obviously have a lot of problems in and of themselves. That all gets exciting, and then applying that to Bosch businesses, I think is fantastic. So that's what's getting exciting. Who knows how the year is going to go? I think we're going to be very busy in Q1 and Q2, and then I'm kind of predicting a Q3 and Q4 a little bit of a slowdown there.
okay.
And we'll not necessarily, I think, a slowdown for maybe my group in Boston in particular, just because we have so many companies that are raising in Q1 and Q2. It's just phenomenal. We were going through the pipeline, Q1 pipeline today, and I think there's going to be 60 or 70 companies on that we're actively looking at just in kind of the Boston/New York area. So that's going to be interesting. And obviously, with all the geopolitical stuff going on, you never know how things are going to go. So we want to get these companies ready.
Every day is a new day there. But I would
It
say
is.
there definitely is this feeling that the new Fed chairman will be selected, bring down rates. And so you're getting these huge infrastructure projects. So much of them are funded through traditional financing as opposed to straight equity capital. And so I don't know. I mean, I think that that trend would be potentially positive for Q3 and Q4 if a lot of deals are financed.
Oh yeah. And when I say slow down, I think it's going to be more on at least in my team in Boston. I'm a little worried the valuations might just be insane in Q3 and Q4.
Oh, okay.
And again, a lot of the stuff we're looking at, there's just so many companies just because of the cycle here that are raising in Q1 and Q2. I'm almost at the point like, what's left in Q3 and Q4? These guys are all going to be funded. So I think it's going to be a very interesting year. I think we'll do a good amount of deals again in Q1 and Q2. We'll see how the rest of the year plays out. And it should be an exciting year. Last year was an exciting year. I think this one will be an exciting year as well. We're also going to find out this year if some of these companies grow into their valuations. And
Yeah.
that's going to be pretty interesting.
Well, I've seen a lot of these so many of these the huge ones you see where they're doing a partnership, let's say with a big corporation, with Oracle or someone like that. Yeah, the partnership sounds great, but now they have to actually provide the data infrastructure for that partnership, and you map it out. And some people, some of the data I've looked at, they're like, I don't know how we can possibly meet this demand, right? I mean, these big
Absolutely.
deals sound wonderful, but what's undergirding those in terms of energy and data site? As in, is that going to suck up basically everything that's needed for all these other smaller deals that are in the pipeline?
Yeah, 100%. That's why you're seeing, kind of the mass adoption of Gemini as well, and some of the
Right.
data that's coming out there. Some of these large multinational corporations are going with the kind of tried and true players. And
Yeah.
there's data security reasons for that. There's interoperability reasons for that. So it's going to be fascinating.
Yeah. Well, I would think too that that's where a company like Bosch, the parent, has the leverage. I mean, if you're a company that large, you've got that leverage, and you were seeing that play out across whether it's like you said with Microsoft and Oracle and all these huge players. They're still going to be the dominant players because they've got the scale, and I assume Bosch is the same way. So that would be good for you guys.
Yeah, it is. And I think what's interesting about Bosch too is we've got really a great kind of C-suite. We don't call them a C-suite because it's a German company, so they have different acronyms, but they've embraced AI, I think, in a smart, methodical way. And that's, I
Sounds
think,
very
going to be very
German,
tricky for us. It is. It's interesting. I love working with the Germans, and the German team is fantastic. I was a little worried that it was going to be a lot of just kind of no.
Or
This
too
is
slow or too
we're too
slow, that kind of
slow,
thing,
and
yeah.
no matter what, I think Bosch will always be a little too slow just because we're such a large ship. But we do a lot of POCs, a lot of those get adopted, and the reason is because we have people who are like, this can really solve some of the problems we have. There's no reason why we need to spend 2 or 3 years analyzing the various AI solutions. Let's get something going here, and I've been very impressed with our management team, and that's been very refreshing.
Well, that's awesome. Well, hey, this has been amazing. Of course, I love when I get to speak to guys like you because I learned so much and I learned a lot today as well. But I like to end the Venture to Victory podcast always with the same question, which is whether it's your business, your personal life, or extracurricular life, what does it mean to you to be victorious?
That is a good question. I have 2 little girls, 11 and 8. So being victorious for me is finding a way to spend time with them and to see them thrive. And, really, work and everything else is for that end goal.
Yeah,
So, I've been doing venture long enough where, yes, another win is a victory, but to be truly victorious, I think it has to be in your personal life.
I agree.
I don't know how any way around that. And, I work with a lot of highly successful people, whether I've co-invested with them or done with friends. And it's interesting after they've made, lots of money, we're talking, billionaires, et cetera, the amount of effort they put into their family is amazing. And
Yeah.
I think they realize that is truly being victorious is spending quality time with them, even when they're driving you nuts. I've got, 2 girls, one's an angel, one's a hellion, but, even when they're driving you nuts, I think spending time with the family, and obviously my wife as well, but, spending time with the family in a meaningful way, disconnected from work is being victorious.
Well, we're gonna see if that definition holds when they're 16, 17, and 18, because I have 2 daughters as well. I'm joking because 'cause they're actually great.
Oh, we're already doing the phone battle with the 11-year-old as we speak, so,
Oh, really? That's
it's
awesome.
trying,
Well, I think
absolutely.
I love your answer. Not everybody responds that way, and it's really true. Like at the end of our time, no one's going to go, "Oh, that guy Adam, he was amazing. He invested in these 3 companies and they
Yeah,
did really great." No one's going to care about that. All it's going to care
nobody
about
cares.
is the people left behind and the impact that you made on their lives and whether you set them up to be productive and happy moving forward. So that is actually how I define personally victory as well. It all has to do with the impact you make in the
Yeah,
personal lives of people.
yeah,
Well, hey,
absolutely.
this well, this has been so much fun. I really appreciate you. I mean, going back so many years, and I'm looking forward to staying in touch and working together in the future. And again, I appreciate it so
Yeah,
much.
likewise, it's been great.
All right, cheers, everybody.
Great,
Thanks.
thank you.
The Venture to Victory podcast is provided by MatchStar Venture Search. If you're interested in any of our open executive roles or need help sourcing world class talent for your company, check out our website at matchstar.com.